Friends, today we're talking about something most people in crypto haven't even started thinking about yet. While everyone's watching charts, chasing meme coins, and waiting for the next pump, something truly massive is being built quietly, without flashy headlines. Something that in 2 or 3 years will be called the infrastructure of the new economy. An economy where billions of transactions per day won't be made by humans, but by machines, artificial intelligence, autonomous agents. And that infrastructure is Hedera. And the token at its core is HBAR. I get it, that sounds like hype. But let's break it all down piece by piece, with specific numbers, specific partnerships, and specific dates. No filler, just facts, as they stand in April 2026. Let's start with the most important question. Why does artificial intelligence need blockchain at all? AI is neural networks, models, datasets. What does DLT have to do with any of that? Here's the thing. We live in an era where AI makes decisions literally everywhere. It approves loans. It diagnoses diseases. It drives autonomous vehicles. It optimizes supply chains. It trades on financial markets. And this is where a fundamental problem emerges, one the industry calls the AI trust problem. How do you prove that a specific AI model made a decision exactly the way it was supposed to? How do you verify that the data wasn't tampered with? That the algorithm wasn't modified mid-process? That what the system is telling you is the actual result of honest computation and not something someone swapped out? When AI was just helping you write emails or recommend music, this wasn't critical. But now, when autonomous agents are managing finances, healthcare, critical infrastructure, the question of verification becomes a question of survival for entire industries. And that's exactly where blockchain enters not as a hype technology, but as a tool that solves a real problem, an immutable ledger, a transparent history. Cryptographically verified records. That's what the AI economy needs to trust itself. EQTY Lab, NVIDIA and Intel. The partnership that changes everything. Now here's the most interesting part. In December 2024, 3 companies announced a joint project that many in the industry are calling one of the most important events in the history of blockchain and AI. EQTY Lab, NVIDIA, and Intel introduced a solution called Verifiable Compute, also known as Prove AI. And at the center of the system is the Hedera network. What is Verifiable Compute? It's not just a partnership. It's a fundamentally new security standard for AI. The idea is this. When an AI system performs computations on NVIDIA or Intel chips, each of those computations can be cryptographically verified and recorded into Hedera's immutable ledger. Literally at the hardware level, at the silicon level. The system works through what are called trusted execution environments. These are available on Intel 5th generation Xeon processors and extend through confidential virtual machines on NVIDIA GPUs. Together, they create what the EQTY Lab team calls a notary system for AI. What this means in practice, if a company uses AI to make decisions, it can prove to a regulator, a client, or a partner that the model worked exactly as it was supposed to. Every computation leaves a trace. That trace is stored on Hedera, a network that cannot be faked or altered retroactively. The result? Over 400. 0 times. That's how much this system outperforms traditional verification methods in performance. This isn't a theoretical improvement. This is a revolution in scalability. And that's not all. In July 2025, EQTY Lab announced the deployment of Verifiable Compute on NVIDIA's new Blackwell architecture. This is the next level entirely. Where previously the system ran on 100 GPUs and 5th gen Xeon processors, it now scales to the most powerful chips in NVIDIA's history. Blackwell is what the next generation of data centers will run on. It's the architecture that the world's biggest tech companies are currently building their infrastructure around. And Hedera is right at the center of that infrastructure. Not as an optional element, as a mandatory component of the verification system. Look at the tech stack. NVIDIA plus, Intel plus, ServiceNow plus, EQTY Lab plus Hedera. This isn't a startup dream. This is corporate reality backed by companies with market caps in the trillions. And HBAR is the fuel powering that ledger. Every verification transaction means usage of the Hedera network. Okay, you might ask, but why Hedera? There are plenty of blockchains. There's Ethereum, Solana, dozens of others. Why did NVIDIA and Intel specifically choose this project? The answer is in the technical specs. For the AI economy, very specific network characteristics matter, and Hedera wins on every single one of them. First, speed. Hedera processes over 0 transactions per second. For comparison, Ethereum at the base layer handles around 15 per second. Bitcoin 7. Solana, with its claimed 65 TPS, regularly goes down under heavy load. When billions of AI agents are making micropayments and verifications, you need a network that can handle it. Second transaction, finality. On Hedera, a transaction becomes final in 3 to 5 seconds. Not 10 minutes like Bitcoin. Not several hours accounting for reorg risk. Exactly 3 to 5 seconds. For autonomous agents making real-time decisions, this is non-negotiable. Third transaction cost. Approximately 0.001 per transaction. 1/10 of a cent. This allows AI agents to make millions of micropayments without losing all their value to fees. Fourth, fixed monetary policy. The maximum supply of HBAR is 50 billion tokens. No more, no less. No additional inflation. As of April 2026, approximately 99.87% of the maximum supply is already in circulation. That means inflationary pressure is essentially zero. Fifth, governance. The Hedera Governing Council currently includes 39 global corporations, among them Google, IBM, Boeing, Deutsche Telekom, LG Electronics, Ubisoft, and many others. These are not anonymous miners. These are accountable corporate entities with reputations and legal obligations. March 2026 brought another major catalyst that we absolutely cannot overlook. HBAR received the status of a digital commodity from both the SEC and the CFTC. What does this mean in practice? It means HBAR is out of the gray zone. There is no longer any risk of a regulator suddenly declaring the token a security and demanding its delisting. For legal teams at Fortune 500 companies, this is literally a green light. It removes the compliance barriers that previously prevented large institutional players from taking positions. Moreover, there's the Clarity Act. According to Polymarket data from early April 2026, the probability of it passing in 2026 stands at 72%. If the bill goes through, digital commodity status will be permanently enshrined in law. In parallel, Canary Capital launched an HBAR ETF, the first exchange-traded fund, based on HBAR, trading on regulated platforms. It has already begun absorbing a significant portion of the circulating supply, reducing selling pressure. For those who understand how institutional money works, this matters enormously. Pension funds, hedge funds, family offices cannot buy crypto assets directly, but they can buy a regulated ETF. And now that option exists. On March 26, 2026, Hedera launched one of the most important products in its history, the Hedera Agent Lab. What is it? It's a browser-based platform that allows developers to create on-chain AI agents, right in the browser. No need to spin up complex infrastructure. Agent Lab offers 3 development modes. No code for those who want to build an agent without writing a single line of code. Low code for those who want some customization. And advanced code for professional developers who need full control. The platform is already integrated with LangChain and Vercel AI SDK, 2 of the most popular frameworks for building AI applications. Google ADK integration, Google's Agent Development Kit, is coming soon as well. What does this mean for the ecosystem? It means a radical reduction in the barrier to entry for developers. Building an AI agent that interacts with the Hedera blockchain, executes transactions, Verify's data can now be done in hours, not weeks. Also already live in Agent Lab, a Python SDK, scheduled smart contracts, and coming soon policies and hooks, a system for controlling agent behavior. Plus, Hedera Stablecoin Studio integration, which will allow agents to work with stablecoins, swap tokens, participate in lending, create stable assets directly inside agent workflows. Here's something I always emphasize. Talking about partnerships and technology isn't enough. You need to look at real use cases. What's actually running in production on Hedera right now? First, Hyundai and Kia. Both companies use Hedera to track carbon emissions. This isn't a pilot. It's a live system processing real data for two of the world's largest automakers. Second, Repsol. One of the world's largest oil and gas groups uses Hedera for digital identity verification. Third, tokenized real estate through Arwa. Real-world assets tokenized on the Hedera blockchain, trading as digital instruments. And this is just the beginning. According to A-Invest data, in 2025, the volume of real-world asset settlements through Hedera exceeded 10 billion. And dApp transaction growth came in at 386% year over year. Here's another key point many people miss. On July 22, 2025, Hedera completed its transition to fully open source code through the Hyro Foundation. What does that mean? It means Hedera's code base no longer belongs to a single company. It's been handed to a neutral foundation, and any developer in the world can contribute to it. This is a massive step toward decentralization, exactly what many of Hedera's critics had been demanding for years. In January 2026, the network upgraded to version v0.69, improving network stability and performance. At Dev Day 2026 in late March, the team presented the year's achievements: new HIPs, Hedera improvement proposals, smart contract improvements, block streams, and further steps toward decentralization through Project Hyro. All right, now let's talk money. Because you're watching this not just out of academic interest, you want to know, what's going to happen to the HBAR price? As of April 2026, HBAR is trading around 0.087 to 0.097. That's well below historical highs. And yet right now, the project has the strongest set of fundamentals in its entire history. Partnership with NVIDIA and Intel, digital commodity status, an ETF, Agent Lab, open source, 39 corporate council members, a growing base of real transactions. Binance analysts put the target at 0.218 for 2026, roughly 150% upside from current levels. KuCoin's forecast gives an average annual level of 0.18, with potential to 0.4 if corporate pilots scale as expected. Why is there such a gap between price and fundamentals? Simple. The market always lags. Major narratives, especially infrastructure narratives, take time to be understood by a broad audience. While most people are thinking about the next meme coin, institutional players are quietly accumulating positions and assets that will define the next era. Look at the supply structure. 99.87% of the maximum HBAR supply is already in circulation. Pressure from team or investor token unlocks minimal. No inflation, no constant downward pressure from above. I want you to understand the scale of what's happening here. We're not talking about another DeFi protocol or an NFT marketplace. We're talking about fundamental infrastructure on which the economy of the future will run. Think of it this way. When the internet was being built in the 1990s, people understood something important was happening. But most didn't understand exactly what. Some invested in domain names, some in internet service providers, some in companies building protocols, the most forward-thinking in infrastructure. The same thing is happening right now with AI. Billions of dollars are flowing into models, applications, interfaces, but there's one layer that all those models and agents will use for coordination, verification, and transactions. That's the distributed ledger layer. And more evidence points to Hedera becoming that layer. NVIDIA, a company valued at over $3 trillion at its peak, chose Hedera to verify its computations. Not Ethereum, not Solana. Hedera. Intel, a company whose chips sit in most of the world's servers, did the same. This is not a coincidence. It's the result of 2 years of research and testing that EQTY Lab has spoken about openly. Let's be honest. Not everything about this story is clear-cut. There are competitors, there are risks. Ethereum and its Layer 2 ecosystem continues to evolve, and also attracts corporate clients. Solana recovers faster from outages and has a massive developer base. New loan and lieu projects launch every few months. Additionally, the NVIDIA and Intel partnership is not an exclusive agreement. Verifiable Compute is an open framework that could theoretically be ported to other networks. And while Hedera currently holds a central place in this architecture, it's important to keep monitoring how the situation develops. Also worth noting, HBAR's price has historically been highly volatile. In 2025, the token reached higher levels before pulling back. Current levels below 0.1 represent support, but not a guarantee of immediate upside. Risks always exist. The key question is whether the fundamentals justify a position. And here, honestly, the arguments in favor of Hedera grow stronger with every passing month. What should you be watching in the coming months? 1. The Clarity Act. If it passes in April or May 2026, it will formally cement HBAR's commodity status and open doors to new financial products. 2. Agent Lab expansion. Google ADK integration, policies and hooks, Stablecoin Studio, all on the roadmap for 2026. 3. Verifiable Compute scaling to Blackwell architecture. The updated version with support for the latest Intel X6 and NVIDIA Blackwell chips is in final development stages. 4. Corporate pilot announcements. Repsol, Hyundai, Kia, and others are already live on the network. The question is when they announce full-scale rollouts. Each such announcement is an additional price catalyst. 5. Potential ETF expansion. Canary Capital has already launched a product. If BlackRock, Fidelity, or Invesco come out with offerings, it changes the game entirely. Look, I can't give financial advice. And I won't. It's your money, and you make the decisions. But I can say this. As of April 2026, Hedera has gone from an interesting idea with corporate governance to a genuine infrastructure layer for the AI economy. Verifiable Compute runs on production NVIDIA and Intel chips. Agent Lab is live and accepting developers. The SEC has granted digital commodity status. An ETF is absorbing supply. 39 corporations govern the network. Transactions cost a fraction of a cent and settle in 3 to 5 seconds. This isn't hype. These are facts. And the facts tell a story. The gap between the fundamental value of this project and its current market price is one of the most compelling phenomena in crypto right now. Do you like this style of deep dive analysis? Drop a comment below. Let me know if you want more coverage of HBAR and the AI crypto narrative in 2026. Like and subscribe if this content is genuinely useful to you. See you in the next one.